We can easily become preoccupied with life's uncertainties, including today's concerns about economic policies. Rather than fixating on what we can't control and shying away from investing, consider ways to brace your portfolio for uncertainty. Hello and welcome to Edward Jones Perspective. I'm Casey Joyce. Today we're talking with Edward Jones investment strategist Kate Warren. Kate, many people think there's a lot more uncertainty about the future direction of economic policies than usual. Is that true?
Yes, there is a great deal of uncertainty about future economic policies, including tax rates, government spending, regulatory policies, the Federal Reserve's interest rate policies, and inflation. The chart shows the measure of economic policy uncertainty that describes what many are feeling. The index of economic policy uncertainty has spiked several times in the past, rising above a measure of 150. More importantly, economic policy uncertainty rose sharply in 2008, and it remains high today.
What effect can this heightened policy uncertainty have on the markets?
As we all know, investors and the markets dislike all forms of uncertainty. In particular, greater policy uncertainty generally has four effects. First, higher daily stock market volatility. Second, challenges to equity diversification. Third, slower overall economic growth. And fourth, stock market declines. So it's not a surprise that in the year before policy uncertainty soared, stocks dropped an average of nearly 6%. But what you might not realize is that better times followed. Lower policy uncertainty became good news for investors as stocks gained an average of 11% over the year following high levels of policy uncertainty.
How do investors brace their portfolios for the effects of policy uncertainty?
The most important thing is to realize that you can't control the changes in economic policies. That means you have to prepare for them by focusing on what you can control, which is the diversification of your portfolio, the quality of your investments, and your reaction to those policy changes. There are three specific actions for investors to consider. First, build a stronger investment foundation by diversifying your portfolio across different asset types and tax treatments. With uncertainty about taxes, government programs, and regulations, it's important to prepare for possible changes in all of them. That means making sure your portfolio contains the appropriate mix of assets that are taxed in different ways. Second, upgrade the quality of your investments. Your portfolio may have to withstand greater stresses, and quality investments should be better positioned for changing policies. And finally, stress test your investments with regular portfolio reviews to ensure they're appropriately balanced with one another and remain aligned with your long-term financial goals. That way you can stay calm and invested.
Thanks, Kate. For more information on any of these strategies, contact your local Edward Jones financial advisor. Also, keep in mind you can like us on Facebook or follow us on Twitter.